Are you a first-time home buyer buying your first home and wondering about the home buying process? How much money will it cost you in addition to your down payment? Maybe you didn't even know there were costs associated with buying a house outside of your down payment. Well, that's what we're going to discuss today. My name is Jeb Smith. I'm a real estate broker here in Southern California, and my channel is all about helping buyers, helping sellers navigate that home buying process. So if real estate is of interest to you at all, do me a favor and hit that subscribe button and stay up to date on all things real estate related. And if you find the content useful, valuable, do me a favor and give me a thumbs up. Again, it helps with that YouTube algorithm and helps more people see it, which helps me accomplish my goal of helping educate buyers and sellers. And if you have questions about the material in the video or something I didn't touch on, do me a favor, comment below. I'll definitely go back and address those. But for now, I appreciate you taking the time to watch. So I can't tell you how often in working with first-time home buyers, they're shocked to hear that there are fees associated with buying a house outside of that down payment. Maybe you're one of those people. Well, that's what we're going to talk about today. We're going to break down an idea, or we're going to give you an idea of what those costs are, where that money goes, in addition to your down payment. Now, there are ways to have your closing costs paid, and I'm not going to discuss that in today's video, but I will give you a link here where I discuss that in another video about having closing costs paid if you don't have those funds. But today we're going to talk about what is needed in order to buy a house. How much money do you need in addition to your down payment? Well, that's all going to depend on a number of different factors. And keep in mind, this isn't going to be precise. It's not going to be an exact science. I can't tell you this is the exact number you're going to need, but I'm going to give you an idea. I'm going to give you a range of percentages. And what you can do is then you can take those and calculate your cost and get an idea of what you might need. But to be more precise, the best thing to do, as I've mentioned in several videos in the past, is actually talking to a mortgage professional. This is where you should start the home buying process, because they can give you an idea of how much money it's going to take in order to buy a house. Not only can they discuss down payments with you and different loan programs, they can break down that cost and tell you almost to the dollar how much money you'll need to start the home buying process. And so that's really where you should start. But today, let's break it down. So when buying a house, there are a couple of fees that are due through the loan process, but the majority of your closing costs are going to be due at the end of the loan, the same time you pay the down payment. So, when buying a property, you have to put an escrow deposit down, an earnest money deposit when buying a property, and then the remainder of your down payment, along with any closing costs are due at the end of the home buying process, right as you close escrow, when you sign your loan documents. That's when those funds are due. Outside of two fees, you can always expect to pay an appraisal fee when buying a home, and assuming you're getting a home inspection when buying a property, that would be an additional fee that you would pay. And in the state of California, that appraisal, depending on the purchase price, it's going to vary. But let's say you're buying somewhere between a $700,000-$800,000 home, that appraisal fee is probably going to be somewhere around $450 to have the appraisal completed. That is money that you have to pay out of your pocket at that time. You're also going to have a home inspection. A home inspection on a property that size would also run you about $400. So you can expect to pay somewhere around $850 out of pocket before the property even closes to purchase a property. And if you decide to back out for any reason, that's money that you spent it. You don't get it back. You'll have to pay it again when buying another property or going into escrow on another property. But there are additional fees outside of that. So what I generally tell buyers when buying a property is that they need somewhere, and this is going to probably get a lot of hate comments on this, a lot of comments below telling me I'm wrong, but somewhere between 2 to 3 to 4%, right? That you're like, Jeb, that's a big range in buying a house. Well, it's all going to depend on how you've negotiated your loan with your lender. A good portion of your closing costs are going to be on the lending side, not on the home buying side. Typically, your home buying costs are going to consist of title, and escrow fees. Those are primarily what you're going to pay when buying a home for the buying side of the process. And those fees are generally going to run you about 0.5% of your purchase price. So if you're buying a $700,000 home, you can expect to pay somewhere around $3,500 between title and escrow fees. Again, it's not exact, but that should give you an idea. So that's 0.5%. So you said, I said a minute ago, somewhere between 2 to 4% in closing costs. Well, that's because you have lending fees, and depending on what your lender is charging you to do that loan will depend on how much money you need. If you've heard of origination fees, origination points, these are percentage points that you pay in order to get your loan completed. Assuming your lender, say, charges you 1% to do the loan, or 1 point, that's 1%, right? And then you have any additional fees that may be charged by the lender, any underwriting fees, any processing fees. Those are fees associated with buying a home. Now, where it gets expensive or can get expensive, so it's not the closing costs that are that expensive or the lending fees that are that expensive when buying a house, because you'll find some lenders, they don't charge you any origination points or any fees up front. They might just be doing the loan and making the money based on the interest rate, but you'll still have closing costs involved because there are taxes due. If you're buying a home and you need homeowner's insurance on that property, you have to pay that homeowner's insurance a year in advance. And if you're buying a $700,000 home, hypothetically your insurance is about $100 a month. That's $1,200 right there in fees that you would be required to pay through the closing on that property. And where it gets expensive is if you start impounding your taxes and insurance. What are impounds? Impounds are taxes and insurance that are included every month in your mortgage payment. And in order for them to set that account up, you have to set your prepaids up through the closing. And that's where things can get costly. That's why it's important to have that conversation with a lender up front when going through the pre-approval process, just to get an idea of these costs. And that's why this video isn't going to be precise and give you an exact idea, because depending on the time of year when you close on a property will depend on how many months you have to put into that impound account. Right now, we're in August. You have to put somewhere between 8 to 9 months of your taxes in an impound account in order to set it up. And if your property tax bill is, say, $700 a month times 8 months, that's $5,600 that you have to come up with in order to set up that impound account. That's roughly 1% of your purchase price. So that's why when we start talking, a range between 1 to 4%, it's because we don't know about origination fees. We don't know what you've set up with your lender. We don't know how much impound account, how many months you're going to have to impound. And we don't, there's certain factors in there we don't know. But the things we do know is that you have to pay that appraisal, that home inspection fee when going through the process, of buying a house. You're going to have about a 0.5% or so fee between title and escrow when buying a house. The other fees that you have associated with it range, because depending on how you've set up your loan will determine the cost associated with that. So that's where it can get tricky in knowing the exact amount, but a rough estimate again is somewhere between that 2 to 4% in addition to your down payment when buying a house. So if you're buying a house and you're putting 10% down, you're going to need somewhere between 14 to 15% probably in the bank in order to have the adequate funds at closing in order to close on that property. Now keep in mind, as I mentioned in that other video that I referenced earlier, closing cost, down payment, they can come as a form of gift. So they can, be gifted to you. They don't have to be, directly from your account. But there's a process with that, and it's mentioned in that video again, which I'll tag here. Once again, in case you want to take a look at it. I know this can all be a bit confusing and there's not an exact science to it, but the idea here is that you know that there are costs in addition to your down payment when buying a house. But if you do have direct questions, comments for me, do me a favor, reach out to me directly or comment below. I'm happy to address them. And as always, I appreciate you taking the time to watch. I appreciate your support. We'll see you again soon. Have an awesome day. Bye-bye.